Hi, everyone. Welcome to today's webinar on the topic of how to ensure 100% safety for on-chain company finances despite the risks. My name is Jacob Kobler. I'm VP at Request Finance and for sure a very proud member of the Web3 Finance Club. As you know, it's the leading community with over 1,200 finance leaders in the Web3 space. And the goal of this community is to share knowledge, to tackle challenges, to meet online and offline. And we have still a very selective membership rate. Only less than 20% are accepted. And we are not only meeting online, but also offline. Our next offline event will be in Ethereum Denver. There's also still opportunity to join and to sponsor. Just reach out to us. And now I want to introduce our today's speakers. So we have a very nice set of speakers today. And I will start with a short introduction of Awowole. He's the director director of technical accounting and digital assets at Aave Labs. I'm very proud to have him here because Aave has an impressive track record and had leadership roles in companies like Meta, Ernst & Young, KPMG, where he was always driving finance, digital assets, and ESG strategies. Next, I want to introduce Gabriel Perez. He's the finance VP from Singularity DAO. Very excited to have him here also. Gabriel is always a leader, thought leader in the topics of financial services, blockchain, AI, digital assets, and he already gained experience in the sectors of fintech, regtech, DeFi, GameFi, and compliance. We also welcome Jeremiah Smith here, the co-founder of OpenCover. Jeremiah is the founder and CEO of OpenCover. He's an entrepreneur and also holds a PhD from Imperial College. Jeremiah's platform is funded by top investors like Coinbase and NFX, and OpenCover is also a partner of Request Finance, and members of the club will receive a 10% discount. Very nice. Last but not least, I also want to introduce a very well-known face here, Jean-Baptiste Chenut, our CFO, the CFO of Request Finance. I think you already know him. JB is leading financial side of Request Finance, a platform that automates crypto operation, crypto accounting, and also since this year, crypto to fiat. Very nice feature. And over 2,200 enterprises already trust Request Finance. So welcome to our speakers. Before we start into our discussions, as always, I want to share that we have the option for our audience to win again 45 days free access to Request Finance. And how can that be done? Please drop your questions in the software, in the Q&A box. In the end of this session, we will have Q&A, time for Q&A, and the best question then will be selected, and this person wins 45 days of free testing. As always, we really welcome you to add questions. We have in the end, so we start now with around 40 to 45 minutes to have a discussion on our core topic today, and then last 10 to 15 minutes we start with the Q&A. So please drop your questions below. We have enough time in the end. Now we did the introduction, and we are now ready to directly jump into our today's topic. And as mentioned, the topic of today is how to ensure 100% safety for on-chain company finances despite the risk. And the first question would be to everyone, so everyone gets the same question. And let's talk about safeguarding on-chain company finances. I want to start with Afeez and ask you, in your experience, what are the top 3 strategies a finance leader should adopt to ensure 100% safety? What's your take on that?
Thanks very much for that question, Jacob. And hello to everyone. Happy to be here today to share some insights on this very interesting topic. The question you've asked is one of my favorites. I always love it because in today's Web3 landscape, ensuring financial security isn't just about setting up a few firewalls and calling it a day. It's a whole new ball game because when you have something new, you have to do something different. And finance leaders need to be proactive and make the investment. It's non-negotiable. We also need to continuously assess for best practices so that everything is fully secure by design. So three things: robust cybersecurity infrastructure, effective risk management protocols, and user education and awareness. And I'll speak to each of those three quite briefly. The first is cybersecurity has to be airtight. I mean, we're dealing with decentralized systems, smart contracts, and digital assets. So there is no traditional bank to call if something goes wrong. A zero trust approach is essential. Basically, this means never trust, always verify, and never assume that any user or device is safe by default, or that every transaction you see is genuine. Strict identity verifications are also important, which can be achieved via access control, user authentication, multi-factor authentication, in fact, and role-based access. These are critical, along with using only trusted tools and protocols. And when it comes to private keys, those need to be locked down. Hardware wallets, multi-sig setups, the whole nine yards. Here's my position on on-chain finances. If you don't need it for your work, you don't need to know how it works, because the more users you have, or the more people that have access to something, the more your risk of being compromised. And to add to that, regular security audits are critical. You must regularly scan for vulnerabilities, do pen testing, and simulate reward attacks. Then, of course, is the second one, which is effective risk management. The key word here is effective. Okay, we are not just talking risk management, but it's effectiveness and doggedness. As we all know, the success of any business depends on effectively identifying, analyzing, evaluating, and controlling risks. We all face risks, businesses face risks, but how you control and mitigate them is actually what is more important. And this is what auditors will call what could go wrong, or process risk points. So businesses need to identify their risk and manage them properly. You wouldn't put all your money in one stock, right? Or put all your eggs in one basket, as the general lingo goes. So the same principle applies here. Diversifying assets across different platforms is crucial. And with regulations and best practice expectations constantly shifting, by the way, I added expectations to that because not everything is currently regulated, as we understand. So staying compliant isn't just a legal thing, it is about survival. And finally is user education and awareness. Okay, you need to educate your teams and empower them. This is everything. This very last point is everything, because you can have the tools, the processes, and all that in place, but are your people aware of how to use them or how to mitigate the risks? The biggest threats aren't always the high-tech hacks, or everything out there. It is human error. And social engineering tactics are getting more and more sophisticated day by day, day after day. And many organizations have lost access to funds or falling for phishing scams just because their people weren't trained enough, or they were just adequately not informed, so they just fell for phishing scams. So yeah, the top three strategies for finance leaders, from my point of view, is to focus on these things, and you would be in a great place. Thank you.
Well, Aave, thanks a lot for sharing your tips on that. I would like to continue with the same question. Gabriel, what's your opinion? What are the top three tips that you can share?
Yeah, thank you, Jacob. So I completely agree with David's points. So from my perspective, the three things that you mentioned that are need to be part of the culture within the company. I think everyone has to have that kind of safety in mind approach to managing finance or any type of business. I'll take my approach a bit more to the operational side, especially from a finance perspective. I tend to focus on three key things for us to manage our finances. One of them is, it may seem simple to some people, but the wallet structure, how you set that up from the beginning. So to manage on-chain assets, we need to understand the purpose of those assets. So most companies that raise funds through, public offerings, for example, need to manage the tokenomics in a way that, is more or less open to public scrutiny. Okay, so tokenomics have allocations that are assigned to, communities, liquidity, for example, rewards, and your community will tend to look into those things. So you need to have those assets secured in wallets or safes that more or less have to be completely, structured in a way that people, or you don't lose the access to those assets. You're not gonna be prone to error. And that the way you manage that, the strategy to manage, kind of wallets that have kind of public view has to be very different to those managed internally. So wallets that are used for internal operations also have to be based on the nature. So you can have wallets that are going to have to be assigned for revenue, for example. So, you can purposely have a wallet for getting revenue or incoming transactions. Wallets that are used for making payments to, whether it's your team or suppliers, converting to fiat. You're going to have treasury wallets that are going to be used for trading or, asset optimization, liquidity, converting to fiat. You have, depending on whether you operate with tokens as well, you're going to have potentially, kind of vesting the schedules with your team. So you want to pay, tokens to your team. So you have to structure your wallets in a way that is, efficient. Each wallet to have a different purpose, and then obviously, manage them correctly. These 3 points that I'm mentioning here, and in no particular order, I think the wallet structure is a key point, but the other thing that we need to understand is also the security behind those wallets and those safes. So there are multiple applications and devices that can be used to manage, your assets. You have their on-chain, hot wallets and cold wallets. I think most people will understand by now if you're working in the industry. But having something in place that removes that kind of single person dependency is also key, and also something that allows for efficiency in managing companies' finances. That's multi-sig, for example, is a good way of ensuring that you can assign thresholds to different people and different authorities within the company, allowing people to have a different role within the approval flow, from requester to approver to reviewer, for example. That ensures that every transaction is more or less monitored and it's being checked by multiple people and even questioned. So many times we make a mistake, but if you run it through a multi-sig, you're able to identify the mistake before it's too late. So I think it's a good way to manage your finances securely. And third is, again, in no particular order, governance and controls. So that basically means understanding who within the company has delegated authority for managing companies' funds. When you're a small company as a startup, that tends to be the founder, CFO, very easy to manage. But when you are working for a much larger business, everyone's kind of focused on doing their own thing, that, it can be easily, confused or forgotten in terms of who manages the access to certain wallets. And especially when critical payments need to go out, you need to have accessibility to those wallets. So having that delegated authority within the company, having different roles and responsibilities for managing company funds, whether it's on chain and off chain, is important. And policies to manage that as well. So, of course, when you create a new wallet, you're going to have your public and private keys. So storing those safely, understanding how they're kept is key to managing, finances in a safe way. So to me, those are 3 points that you can follow that tend to be operational from a finance point of view that will help you manage your finance safely.
Thanks a lot, Gabriel. I want to now continue and ask again the same question to Jeremiah. Could you continue, please? What's your take on that?
Yeah, so really strong points from Afeez and Gabriel. And I think, the number one tip is you need to have someone that's responsible for security in your company, regardless of the size. That's the real sort of start of the solution, because every company is different and the threats will be different. And so what that means is that you want somebody who's actively in charge, like own security in your company. It could be like a full-time role or not a full-time role if your company is smaller, but you want them to actively think about the security posture of the company, derive the actions necessary, to address those identified threats and make sure that you talk to them so that they understand your FinOps, so that they can include your FinOps in their threat model. So there are a lot of frameworks to do these kind of threat models, like Stride and Drend, or you could just do like a sort of like risk matrix exercise. But the trick is that in our industry, the threats change constantly. So you have to have somebody who's thinking about this and updated the threat models as the company grows, and also as new threats arise, because people are very creative when it comes to attacks on Web3 companies, since there's a direct financial incentive. So I think that's the first tip. The second one is around the tools and processes. I won't sort of repeat what we just heard, but I think, yeah, this sort of like, so I don't like the like, don't trust, always verify. I prefer trust and verify. But yeah, basically you still have to sort of be like take a first principles approach to security. So for example, when you're signing a large transaction, you probably or you should simulate it before you sign it. In certain wallets, there are tools that do that, like through Tenderly, or there are sort of browser extensions that you can use as well, like Pocket Universe to do those simulations. And I think the last one is, if you are looking to earn yield on your treasury, you want to either minimize or transfer the protocol risk. You can minimize the risk by going with blue chip protocols to earn yield. So I'd call that anything with over $1 billion in TVL. You can check DeFi Llama to see the updated list. Or if you want to transfer risk, then you can cover your positions on those protocols with insurance or insurance alternatives. And there are multiple companies that do that, including ours. So that you really focus on wealth preservation, which is what you want to do if you're managing a company treasury or somebody else's money.
Thanks a lot, JB. Last but not least, what's your opinion, top 3 tips? I think you're muted. One sec, I unmute you. Okay. Please start again. Now you're unmuted.
Okay. Yes, so I totally agree with everything that was said. And at Request Finance, for example, we combine multi-sig and hardware wallets to get the highest level of security. But I just wanted to add 3 more suggestions and not repeat what has been already said before, because it was very complete. So I think that one of the main suggestion I can have is to do your own research each time you want to use a tool, and just not trust the tool because it's well known. You can check, for example, if it has been audited. But even then, risk still exists. And at Request Finance, we actually used a token vesting solution that later got hacked in a big way, and we were lucky. We were not affected, but it was a free solution. So I would say that we need to be even more cautious when something is free. The second one is to talk regularly with the CTO or the cybersecurity expert, because as a CFO, it's not always easy to fully understand and fully catch all the security risk. So it's better to get advice from people who are specialized in this area. And in my opinion, it's essential in the Web3 for a CFO to work closely with the CTO. And the last thing, it's to always do a test transaction first. This is something I do systematically. So when I deal with a decentralized non-custodial system, I always start with a small test transaction before sending a real amount, because it can be stressful to move large amounts without having anyone to turn to if something goes wrong. So testing first is always a good idea.
Thanks a lot, JB. And very nice that you already touched on a topic of the risks involved in managing on-chain finances. This is also the next question I would like to continue with. So to better understand, what are the biggest risks company face when managing on-chain finances? And therefore, I would like to ask Afeez, what do you think? What are the biggest risks you are exposed to on a daily basis when managing Aave's finances?
Quite good question. So, managing on-chain finances can sometimes feel like you're navigating a minefield. Okay, one wrong step and boom, you're dealing with fund losses, counterparty issues. Because like JB said, you do a test transaction first, just kind of reconfirm the wallet, they get to the right destination. You ship a huge sum of BTC or any other assets to a wrong wallet, it's gone. Okay, so you could end up with counterparty issues and also regulatory troubles because KYC, AML is a thing, right? You need to know who you're paying to, or even a damaged reputation. So companies diving into this space have to be extremely cautious because the risks are huge and real. And I'll say, take smart contract vulnerabilities, for example. The whole idea of smart contracts is that they execute automatically without the need for a middleman, which is great. And it is great until there's a flaw in the code. And in crypto or Web3 generally, a single bug can mean millions lost in a split second. Just look at the Bitfinex heist, which is being touted as the biggest heist in history, right? Hackers found a weakness in the system and siphoned off 120,000 Bitcoin. That's billions of dollars today. So what is the best way to avoid this? Just rigorous smart contract audits. Companies should be doing independent third-party audits and stress testing before deploying anything on-chain. There are no shortcuts to this, no shortcuts at all. Then there is private key management, which I believe Jeremiah talked about. And this is basically the digital equivalent of keeping your vault keys safe. If you lose access to your private keys, or worse, they get stolen, that's it. Game over. The funds are gone forever. And you need to bear in mind there is no forgot password button here or anything like that. So I always say, cold wallets, multi-sig security, and strict internet controls are critical. They are non-negotiable, like I said. And I like to use the word non-negotiable for things that you shouldn't even, compromise on. And then let's talk about regulatory uncertainty, right? Because that is a major headache for our industry. Any money or anything that is wealth related is highly regulated, and laws around crypto are constantly evolving. And what's considered acceptable today might not necessarily be acceptable tomorrow because this industry is moving fast. And the innovation we have at hand is way ahead of regulation, which is a good thing. And I always believe that innovation should precede regulation. But it's a bit of a tricky situation. Is it chicken before the egg or the egg before the chicken? And we have seen cases where, companies face hefty fines or even got shut down in certain jurisdictions just because they didn't stay ahead of compliance. So what is the best move? I just say, work with experts who specialize in Web3. Jeremiah and JB already also picked on that. And of course, we can't forget market volatility and liquidity risk, which is very important, especially as accountants. The crypto market moves fast. Prices can swing in multiple directions in a single day. So if a company doesn't plan for this, they could end up in serious financial troubles. So adequate planning, stress-tested liquidity plans, emphasis on stress-tested, and making use of hedging strategies can help you weather extreme conditions. And I like to say that at the end of the day, Web3 finance is still evolving, and companies that take security, compliance, and risk management seriously will be the ones that will survive and thrive in this space. We have to be proactive, not reactive, because mistakes are very expensive.
Very nice, thanks. Gabriel, do you agree? Do you disagree? What's your take on that?
I completely agree. I think, companies operating in the Web3 space, are kind of prone to quite a lot of risks, and the ones that Aave just mentioned, very important, and there got to be mitigating plans in place to deal with it. I'll take it a little bit step further, to be honest, and I kind of mention risks that apply not only to companies but also to individuals, because when you have been in crypto, Web3 for some time, either you or someone that's close to you would have been victim of fraud, a scam, or human error within crypto. And I think those are risks that sometimes we take for granted and we have to be prepared for. So fraud, we know how crypto sometimes is seen as a bit of a Wild West. There are so many very complex, very well thought of fraudulent activities happening within the crypto industry, that we have to be prepared for any of those potentially, targeting our companies. So being mindful of those things and understanding what the risks are will help us mitigate those things. So we have to be vigilant. And I also believe that scams are, a big thing within the industry.
Mm-hmm.
Obviously we communicate in many different social channels. And companies can become the target of different scams, from different emails, phishing emails, and things like that. People asking for funds to be sent, and different team members being impersonated, from the CEO to the CFO. It's a major risk in any business. So not only within crypto, but any type of business. But I believe that within crypto, that's kind of a much larger risk, because we seem to be kind of a larger target, as we are seen as an industry that's not well prepared or potentially not matured enough to deal with those activities. One thing that happens a lot is human error, and I think is very easily done. I mean, if you run a very manual process internally, people can actually make a mistake quite easily. Wallet addresses are quite long. You can easily get a digit longer in your wallet address, and then you burn your tokens. You send funds to a person, and it's very difficult to recover. Easily, you can use, with the amount of different chains available on different networks, if you use the wrong chain and you send funds using the wrong chain, you could potentially just, lose quite all your funding, all your, value, transaction, whatever you send. So I think I go back to one of the points that was made earlier by Jean-Baptiste. So, send a test transaction first. That's the way to actually prove that you're using the correct address and the correct chain. I think that really helps a lot to mitigate the potential human error. Ensure that there are multiple people in the business reviewing the information, especially when you have a large transaction. That help ensure that you're using the correct wallet address, you send the correct funding, and it's relevant to the payment that you're making. And in most cases, we need to ensure that a payment is made on the back of an invoice or an official communication, context, text, or whatever. But remain vigilant and have processes and procedures in place within your company to ensure that you can deal with any such activity, whether it's identifying and avoiding risk or fraud or scams or human error. We see those very often, and even if you're prepared, they'll continue happening.
Thanks, Gabriel, for that. You touched on a very interesting topic, which is scams and hacks happening in industry. Also, Jean-Baptiste, you before already mentioned that the vesting platform that you used got hacked. So I would like to touch on that topic. So as finance leaders, you are on the one hand, you're doing a lot of topics on your own because it's a new industry. On the other hand, you rely on software providers. You can't manage without software providers. So I would like to understand how finance leaders you can prepare that all the tools that you use meet the audit and certification standards. I mean, we know in the industry, there's ISO 27001, SOC 2, more and more certifications coming up. So how can you as finance leader make sure that all the tools you provide are secure? So I don't know, maybe Jeremiah or Jean-Baptiste, someone of you want to take that question?
Yeah, sure, I can chip in. So, the issue is perfect security doesn't exist, right? There's always going to be, whether it's on-chain, off-chain, you can always have issues. Some tools can be certified if they're published by a company or with a traditional structure. You can ask for the certifications like SOC and ISO. When you're doing DD on the company, they'll provide the reports and you can verify the reports. But I think the issue that we face is that a lot of the on-chain tools we use, like protocols basically, don't have certifications. They can't have certifications because theoretically the team developing them is decentralized, right? So you do have to onboard some risk when you're doing on-chain finance. You can minimize the risk with the kind of approaches and tools that we mentioned. You can transfer the risk in some cases with insurance and insurance alternatives. But really, I think the biggest risk we face is that there's just this ever-evolving set of threats. There are a lot of people, or there are a lot of attackers who have a direct financial incentive to do attacks on chain companies because laundering funds is kind of easier than with traditional infrastructure. So that's why you really want to have, as we mentioned, somebody that is in charge of security at your company. You want to model all the threats, which will be unique to your company, and you want to do that. You want to keep that up to date. There's one interesting story I want to share. Last month, one of the Morpho founders shared on Twitter that they had an open position. I think it was an engineering position, and 20% of the applicants they suspected were from the DPRK, and they were using deepfakes to mask their faces and accents. So the attack vectors and the attack methods are constantly changing. So you can't just say, hey, here's some tools, here's some practices, we figured it all out, and never think about it again. It's something you need to constantly do.
Thanks for sharing this. And JB, maybe can you share what you learned from this one incident where your provider got hacked? You mentioned you were lucky, nothing happened to your funds, but what were the learnings you took from that? And did you do anything different now in terms of how you assess your providers?
Obviously, I think even if certification can be a part of the solution, as mentioned before, it's always reassuring to know a service provider has been audited. But the most important thing is always to do your own research, like I said previously, because you need to manage the risk on your side with different solutions, like OpenCover, for example, rather than relying on the service provider itself.
Thanks for that. Cool. And what I also see in the industry right now, for sure, we focus on security of on-chain assets, but still there's the world of fiat, fiat currency still playing a big part. And what we see more and more the feature or the process of managing crypto to fiat transfer efficiently is evolving. We noticed previously from using exchanges to off-ramp, but also there's a lot of innovation happening. So I would be interested in how important it is for Web3 companies to manage the crypto to fiat transfer efficiently. And are there any specific risks and solutions you would like to share? I don't know, maybe Aave, you want to take the question?
Yeah, sure. Yeah, so now off-ramp treasury management, which is crypto to fiat basically, is a crucial practice for any company handling digital assets, because not all businesses, which would be your counterparties, yet accept crypto as a form of payment. So you need cash, And over the past few years, we have seen that crypto payments, particularly in stable coins, which have made it far easier, have proven to be both faster and cheaper way to manage B2B payments, or even B2C or P2P. Now, and this is even way more effective when you're making cross-border payments. Now, an average international payment takes, from my experience, 2 to 3 days, could be more if there are no issues. But with crypto, you can get it done in a few minutes or even in a matter of seconds, depending on the blockchain on the network. However, many businesses still prefer to be paid in cash. Like the saying goes, say cash is king. I don't know how long it's going to continue to be king. So companies with crypto holdings then find themselves with this regular challenge of having to on-ramp, off-ramp, and you end up with a hybrid crypto and fiat treasury, which is not that difficult to manage. You just need to have a strategy in place and plan your liquidity well. So I believe you all admit that crypto payments are not perfect, but so are traditional payment rails. And in Web3, Security, speed, accuracy, compliance, and operational efficiency is everything. So automation isn't just a convenience; it is a necessity for financial resilience. It's a necessity. It is something you must have in place, to meet your obligations in the ordinary course of business. So you need to ensure that you not only secure but also streamline your digital assets and related operations for on-ramp, off-ramp. And ideally, you would need an enterprise-grade solution bearing security in mind, that can secure connectivity to Fiat and off-ramp and automate conversions, because you also need to convert at market rates at the time of the settlement. So this can be done through APIs or with just a few clicks of the button if you want to still go manual. Such a enterprise-grade solution will also help with the reconciliation at period ends, because they will enhance operational efficiency and transparent reporting. They just make things easier because everything is on record. The rate you transferred, the unit you transferred, what you transferred, and to whom the payment was made. So it's all there, and it helps also reduce labor costs and man hours when doing period end closes.
Cool. Thanks for that. Nice, very nice. And Gabriel, what's your experience so far with like off-ramping, crypto to fiat? Do you have any specific learnings you would like to share?
Yeah, certainly. So, I mean, I've been in the industry for just over 7 years now. Recently, I think the offering of crypto to fiat is getting a lot better. Previously, we had to, reach out to so many banks trying to get access to fiat. I think if you're a crypto company, it's very difficult to scale if you don't have the option to pay in fiat, unfortunately. The reason why is because to attract talent for mainstream into organizations that are growing and trying to become mainstream as a crypto company is very difficult if you don't have the ability to offer fiat payments. It doesn't have to be the whole compensation part in fiat, but I think some can really help because everyone faces or used to face the same challenge of not being able to off-ramp. But things seem to be improving, and I think the offering of crypto to fiat creates a major opportunity for companies to scale. Not only becomes or helps companies within the industry become more efficient from a financial management perspective, but it also helps to maintain liquidity within the company, to improve relationships with your staff and your personnel, ensuring that people are satisfied with payment and how they receive the hard-earned cash. But also, kind of creates a different way of operation, okay? Because ultimately you have access to something that has been very challenging in the industry for some time. But there are major risks, and those risks we need to understand. I think one of the key things that we use internally within our company to select a crypto to fiat provider was look at the reputation of the company. And this goes back to the point that was mentioned earlier. I completely agree with Jeremiah's point that you're never going to be 100% secure or safe. And also agree with the fact that because most crypto companies tend to operate in a decentralized way, it's very difficult to get certified. So in a lot of cases, you rely on things such as reputation of the company, reputation of the team, the type of kind of management and leadership they have, and talent that they have operating. That creates, gives a little bit of trust, and then it helps to kind of manage that. So by introducing the crypto to fiat solution, we managed to streamline a lot of the operations internally. Not only help with managing payments, but also help with the accounting, because the process is so well streamlined that the end result is more or less all on chain, and then all of that on chain data you can take forward into your accounting process, and that kind of helps from an end-to-end perspective, for financial operations. So yeah, that's my experience, and I think recently I'm finding a lot more positive and helping a lot of business grow.
Cool, thanks for sharing that. And now we touched on different tools again. So maybe Jeremiah, could you share some example of of crypto finance tools where you said without them you could not live anymore, or at least they improved the security of how you are working? Are there any tools you would like to share? What are the top tools for you? Oh, I can't hear you anymore. I don't know if that's only for me.
Can't hear me there.
Can you hear me now?
Yeah, perfect. Now we can hear you again. Nice.
Cool. Yeah, so as I mentioned, I think transaction simulation, although it's not 100% infallible, is a big one. So Tenderly or Pocket Universe, if you're in a setup where you can use a browser extension, obviously hardware wallets. Yeah, transaction insurance, if it's part of a platform like Request, and protocol insurance, whether it's through OpenCover or somebody else. I think those are the tools that we actively use to to minimize risk basically on chain.
Mm-hmm. Cool. Because you mentioned OpenCover, I would also like to ask you, JB, about your experience, because we know that Request Finance integrated OpenCover for protecting company finances. So could you share some experience in the onboarding process, how it worked, your experience with that? I'll mute you again. Wait. There you go.
It's okay? Okay. I think that Jeremiah mentioned Request Finance, and yes, on the Request Finance tool, we offer the OpenCover insurance. And how does it work? So it acts as a non-chain insurance solution to secure transaction for businesses who use Request Finance. So this protection is essential for us in a Web3 environment, because as we said, DeFi protocols are never 100% secure, even if they are audited. So there are always vulnerabilities and hacks. It's common in the Web3 ecosystem. So having a solution like OpenCover increased trust for businesses who adopt Web3 solutions like Request Finance. And the partnership with OpenCover allows Request Finance to add an extra layer on financial security for its user, which is stronger benefit, especially for companies who manage large volume of crypto transaction, and they don't see it when they use the tool. So it's very easy to use.
Amazing, cool. Maybe to finish with the topic on tools and learnings about what are the best tools. Aave, you want to share what are the tools and platforms that you rely on that make your life as a finance leader easier?
Any particular product?
You're mute.
Right?
Perfect. Now, yeah, you can answer now.
Okay, perfect. Yeah. Yeah. So I'll name a few, but no particular endorsement for any product or service. Now you have to think about multi-sig wallets, for example, like a BitGo and multi-party computation, the MPCs as we call it, like Fireblocks and Curve. And I know Fireblocks is even taking that a step further with the MCP CMP. And of course, enterprise custodial wallet solutions like Coinbase Prime, Coinbase Custody, Anchorage Digital, and blockchain monitoring tools, which are really, really important, like chain analysis. And like AI is stepping up as well. So AI powered fraud detection tools like CRM Labs, and of course, Request Finance, which is your all-in-one platform for crypto and fiat operations. Yeah. That's one, yeah, but those are the ones that I'll say I'm quite familiar with.
Cool. Thanks for your answer. Before we move to the next part of the Q&A, I would like to finish with the last question and would like to ask every one of you, so all the 4 speakers, to share in a very concise and short answer what you're seeing as the most emerging and the top trends in the industry, so in the Web3 finance industry, looking ahead in the next a couple of years. What are the biggest trends that you see forthcoming as a finance leader? Please keep your answer short, and maybe let's start with Gabriel. What's your biggest trend that you see in the future?
Yeah, so I believe in kind of transaction monitoring and on-chain analysis. That's going to be helped by AI. So AI is going to play a massive part in helping analyze data on-chain. We know that block explorers are very difficult to kind of, review and understand. So that really helped. Secondly, security. As companies go into mainstream, I think security is going to be a big topic. And as we grow into the sector, we need a certainty for businesses. And ultimately, it's also going to be automation. So automation will continue to be a big driver of companies scaling within the industry.
Thank you, Jeremiah. What do you think? Biggest trends for you?
Beyond what Gabriel just mentioned, I think what we're seeing right now actually is the merging of sort of Web 2 and off-chain products with Web 3 and on-chain backend. So if you use request now, you can pay in crypto and it gets delivered in fiat to whoever you're paying. If you look at what Coinbase just did, they just released in their centralized exchange in a way, or through the same interface, Bitcoin-backed loans, which actually use Morpho in the backend, basically like an on-chain lending market protocol on the backend. So basically, I think what we're going to see is a lot of sort of fintechs and neobanks that provide the same services they're providing today, plus the new services that you can provide by billing on chain through this sort of like fintech interface, but using blockchain as the backend and the protocols mostly as a backend. So we're going to get a whole slew of new fintech products that are cheaper, faster, more efficient, more beneficial to end users, and also create new opportunities for folks, like through staking, for example.
Cool. Thanks for that. JB, what are the biggest trends you see as a CFO?
We talk a lot about AI, so I think AI and automation in financial management will improve security and efficiency. The decentralized identity is a big topic because we spend a lot of time to fill in KYC, AML processes. So I think there are big opportunities in decentralized identity. And finally, we speak also a lot of real-world assets and on-chain tokenization of assets like bonds or real estate, for example. So I think it will increase liquidity and transparency in the next few months or few years.
Thank you. And last but not least, Aave, you want to finish the round?
Yeah, sure. So I think JB, Jeremiah, and Gabriel, they did justice to that question already. Now, automation is changing everything. Compliance is getting smarter. AI is just stepping up, and tokenization is also changing the game. But I believe overall machine learning tools will play a big impact in. We are beginning to see more and more the intersection between blockchain, digital finances, and AI. And I was just listening to a podcast just yesterday where the controller at OpenAI shared some useful insights on how they're actually using AI, for financial close and reporting. So, in the end, it's all about, more secure, more efficient, and making sure we are better equipped to navigate the fast-moving digital asset economy. And those are the key points that I see as the emerging trends. Thank you.
Perfect. Thanks a lot. That were really nice closing words. And we come to the next section. Before we jump into that, I want to remind all the audience again, please feel free to drop your questions. We, I think, collected 5. That's nice, but still there's the last chance, because we move now to the next topic of Q&A. And as a reminder, the best question will win a prize. Will win 45 days of free platform testing of Request Finance. And therefore, we start now with Q&A. I will now check the questions, and I see one question already got 3 upvotes. So we take that question for sure, but it's also very similar to our question that we just answered, but still, let's take it. I think you should see the question now if I start pressing start answering. Yeah, so now the question is here. The question from George Harris is, how do you see the future of on-chain safety evolving? Very nice question for sure. Someone want to answer that?
I'll take that. Okay.
Thanks.
And you're very right that Jacob is just a a tweak of what we just discussed, but we can shed more light on it. The way companies manage the finances is evolving very fast, and a few key innovations are set to make a massive impact. Like I said, automation, AI, blockchain, they are driving major shifts. Instant crypto to fiat conversions, that is really key. That is absolutely important. Because they also help to reduce volatility risk and streamline settlements. And of course, on-chain KYC, AML solutions, and automated audit trails, which makes compliance and fraud prevention a lot better and stronger. So those things will make us future ready, more secure, and more efficient.
Perfect. Thanks for that. The next question comes from Sunil, and Sunil is asking, if a company is just starting with on-chain finance, what is the first security measure they should implement? Very nice question also. Who has a good answer on that?
I can answer if you want.
Thanks, Jeremy.
If you want, Jeremy, you can answer.
Well, I would just say do a threat model is the first step, and figure out where your risks are specifically for your company, and then either mitigate or accept the risks and create response plans for the critical incidents. I think that's the first step, because every setup is different.
So that's perfect, because it completes my answer. That will be to use the multisig and to use a hardware wallet, and the combination of those two tools makes your stack even more secure. So I would start with that and what Jeremy said.
Perfect. Thanks for that. We have another interesting question from David. And David is asking, how often should companies review and update their security practices? Also a nice one. Who wants to answer this question?
I feel like I have to answer something, but it does feel like something that perhaps is more suitable for Jeremiah. I do believe it's as often as needed from my perspective. I think very often we look at processes internally and realize that things can be done better. I think security is not an exception. I think every single part of the business needs to be reviewed as often as you can, but I guess it can be very time consuming and laborious if you have to do it for a larger company. But the higher the risk it is for your company, the more you have to review it. And risk is involved in either the treasury of your company is a large treasury, or the size of your team is increasingly growing. Then that's where you have to continuously look at your processes.
Amazing. And I think we have time for one last question. And the last question comes from Saphodeep Sanyal. And Saphodeep is asking, as a finance leader, how does one build a secure internal on-chain ecosystem and monitor wallets not operated by finance? It's also a good question, yeah.
I'll take a little point to answer part of that question. So, you can use kind of portfolio management tools. Dbank is a typical example. You can bundle multiple addresses into one to allow monitoring of those wallets. You may not necessarily have access to execute transactions, but certainly you can create bundles where you can view multiple wallets in one single way in place and share the bundle with people so they have view access. It's good for reviewing transactions. It's relatively cost effective. It's a good way to manage a portfolio of wallets across the business.
Perfect.
By the way, I'm not promoting the bank. I'm using that as an example. There are multiple other protocols that can be used.
Amazing. Thanks for that. And also that brings us now to the end of our session. First of all, I want to share with our audience that you can reach out to all our speakers today. We will share the contact details on all our posts on LinkedIn, but you can also ask us for direct intros. I think the speakers are very happy to provide more info about their products. And also, I want to thank the audience for the questions. The best question will be selected after that, and you will get a email notification of who's the winner. And last but not least, I would like to mention that the Web3 Finance Club is hosting a very nice event, a side event in Denver at Ethereum Denver. All our Web3 Finance Club members are invited, so you can join for free. Please register on the Luma event. And for sure, if you want to take a sponsorship package, there's still one place left, I think. So just reach out to us. And last but not least, I would also mention the Request Finance Partner Program. If you want to grow together with Request, if you want to host events together, if you want to join this webinar or do anything else, we have a new partner program. Reach out to us if you want to learn more. I really thank Aave, Gabriel, Jeremiah, and JB for taking part. It was a really nice panel today. Thank you so much. And hope to see you soon at an online or offline event with the Web3 Finance Club. Thanks for your attention, and looking forward to see you soon. Thank you.
Thank you,
Thank
Jacob.
you. A pleasure.
Thanks, everyone. Take care.
Thank you.